Bitcoin will go lower, perhaps $50,000, $55,000. And that's where I told my clients to get active again.
Yeah, I think the SpaceX IPO, the massive flood of money that's kind of flowing through the AI trade right now, I think that sucked a lot of the oxygen, a lot of capital away. Clients who have tens of millions, hundreds of millions of dollars in Bitcoin, they will never spend that Bitcoin.
Bond market is a ticking time bomb. It's just a matter of time till it's over.
So there's gift taxes, there's estate taxes, and the rate is 40 cents on the dollar. So it's usurious. The good news is a lot of those taxes are optional.
So actually, I just recommended my clients to buy beneath 60,000K. I also recommended them to sell above 120K. Was so far a good call. I think we are pretty close to the bottom of the bear market. What do you think, guys?
Okay. Yeah. I mean, I think we're sitting here right around the 200-week moving average. And so I think that kind of feels like, I mean, my lips to God's ears. I hope the bottom is in. But yeah, I think the other side of it too, though, is for the kinds of clients that I get to work with, it doesn't really matter. Our clients are the kind of people who have been in the space for a very long time, whether it's trading at $120,000 or $80,000 or $60,000 or $5,000, they're in profit. And so, but they see Bitcoin really as the foundation of generational wealth for them. And so they are in this mode where it's less about more accumulation, more accumulation, more accumulation, and really more about this search of what is this going to mean in the next generation? How do I prepare my spouse, my partner, my kids for this what will be a windfall that really that my clients frankly didn't expect. They didn't get into Bitcoin for the purpose of making a fortune. The fortune just kind of happened because Bitcoin does what Bitcoin does. And so they were early builders in this space. They were mining on laptops when you could still do that. These are people who literally mortgaged their house in 2012 to buy as much Bitcoin as they could buy.
So your clients are OGs, I guess, or do you have also like old money and do you have to persuade them and convince them to buy some Bitcoin?
Yeah, it's really more the former. We have more. So we built around a handful of OGs early on. I was introduced to my first Bitcoiner in 2017. I didn't know anything about Bitcoin, but this is a person who was a serial entrepreneur in the space, and they couldn't find anybody to help them have serious conversations about how do you structure wealth when that wealth is Bitcoin. And so that kind of set me and my company on a course of learning about Bitcoin, how to structure it. And my background was as an attorney structuring traditional wealth. And so now I had to apply that skill set to this new asset. And then along the way, those clients told other people who they knew and said, hey, these are my guys. They do this really good planning. And so then, again, kind of stepping forward, from 2017 through 2018, 19, and beyond, we had more and more clients with a similar profile. And to a person, those clients wanted services that were beyond the remit of a law practice, at least in the United States. They really wanted something that was a closer approximation to a family office. They wanted help with banking. They wanted help with investment decisions and things like that. And so then we restructured to, we sunset the law practice. I retired from the practice of law, and we turned Bespoke Group into a registered investment advisory, SEC registered entity, now operating on 2 continents, in Europe and in the United States. But because of our journey that way, we kind of organically grew around Bitcoin. We have a deep conviction about Bitcoin specifically, but we also have a very broad base of services. We have a very diverse team. And now we're having traditional money, old money come into our group that just like the way we see the world, and Bitcoin then becomes part of that story as far as cross-asset allocation, liquidity management, real assets versus speculative assets, things like that. And we see Bitcoin as a real asset.
Yeah, definitely. What's your outlook for Bitcoin next couple of years? Do you think the US will have also like a treasury, like, or perhaps like Bitcoin-backed dollar or something?
To be honest, Mark, I don't think so. I mean, I don't think that's in the cards. I don't know to what degree this is going to be a popular or unpopular opinion in this room, but, and this is not, I don't mean this as a statement about the present administration, although I do think it applies. The United States political system has been capricious at best for a generation or more. And now when headlines sell, when social media clicks and @ tags and likes sell, whoever is in office, regardless of their political affiliation, they're going to say what's going to drive the modern narrative, and then they're going to just pivot right away from it. Then we're going to be at war in Iran. Then we're going to be pimping our own shitcoin. It's like there's so much just constant churn. I don't think that there is the attention span in the United States to do the real work and understand Bitcoin to the point of it becoming part of a sovereign fund. And actually, I think that's probably net positive for Bitcoin.
Okay. Yeah, my outlook is actually pretty positive. I think we have the bear market for a couple more months, and then the 4-year cycle will be start again. So I think next couple of weeks, months, we perhaps see even lower prices. I don't know what do you think about the IPO from SpaceX, but I think there was so much capital rotation, and perhaps we will see also a correction at the stock market, and then Bitcoin will go lower, perhaps $50,000-$55,000, and that's where I told my clients to get active again. And then I think October, November, December, then we will see the next 4-year cycle.
We will have an Uptober again.
An Uptober, like everywhere, yeah, like every time. Yes, I guess so. It's in the code actually. You know, it's math, and so why bet against the winning team actually?
Yeah, I think that's right. Yeah, I think the SpaceX IPO, the massive flood of money that's kind of flowing through the AI trade right now, I think that sucked a lot of the oxygen, a lot of capital away. Michael Saylor talks about this at some length, so this is more his ideas than mine. I've kind of been learning from the master.
He's not listening. You can talk about it.
So I'll take. So those are my ideas. Those are my ideas. I didn't hear those from anybody.
Yeah.
But no, but yeah, I think that capital is dry because it's been flooding out of a lot of the Bitcoin space into these SpaceX and other kind of AI frenzy, which I think is part of the maturation cycle of Bitcoin. I think every generation, call it like a 4-year generation, they kind of have to learn about Bitcoin, and they go from a speculative trade to actually becoming quite a conservative trade once they understand what Bitcoin is and how Bitcoin works. But it's every new phase of money that comes into Bitcoin seems like they have to go through that learning of its number go up, it's to the moon, it's we're all going to get rich, and then, oh, wait a second, it doesn't move like that necessarily. Then the weak hands wash out when the pain comes to the market. And ultimately, those who stick around with the diamond hands and hold through the capitulation moments, they say, oh, wait a second, now I actually understand that this is not really a speculative trade. It's a volatile trade. It's an absolutely volatile trade, but it's not a speculative trade. And so I think that when tech money moves in thinking that they're buying some IPO or they think that they're getting some little token play like from the DeFi days, they're in for a lot of disappointment. And then those who have the conviction to stay create a new base, I think, of the long-term holders.
Yeah. So my wealthy clients, actually, they started accumulating again right now, and they also have the long time horizon. They say 5 to 10 years or perhaps hodler forever. And then there's the question about, okay, how can it bring it to the next generation, you know? Because, we do multi-sig, of course. I think you have the same custodians and so on. So what can people perhaps here in the audience take care about for the future if there's something happening, for example, with their fortune and bring it to next generation?
Yeah, I think this sometimes gets controversial in Bitcoin circles because I wrote a white paper that's freely available on my website. I shared it with you.
Yeah, it's great.
Earlier today, if not earlier than that. But I wrote a paper called The Sovereignty Paradox. And if you want to download that, it's just freely available on our website. If you go to bespokegroup.io/sovereignty paradox, it's just a PDF white paper. You can download it. It's formatted just like Satoshi's white paper, so it looks familiar. When the idea is that when Bitcoin first launched in 2009, it was a peer-to-peer electronic cash. It was designed for decentralized transactions. It was a transactional medium of exchange. That's the reason it was launched. However, the nature of the algorithm is such that not only is the number of Satoshis hard capped at 2.1 quadrillion sats, that's 21 million Bitcoins, but 2.1 quadrillion sats, there's a decaying supply rate. So this means that Bitcoin necessarily gets harder and harder and harder over time as demand grows. So we know that over the long arc of time, barring some catastrophic failure to the Bitcoin network, Bitcoin can only trend up and to the right as against infinite currency, infinite dollar, infinite euro, infinite fiat. So that means for people who have long-term conviction to Bitcoin, you need to be thinking about, how do I structure my key management control based on what I plan to do with a Bitcoin? So if I'm going to spend my Bitcoin, to the extent I'm going to go and buy a pint at the bar and pay in sats, I don't need a complicated system for that. That's the cash in my pocket. I don't need people helping me with that. But then once the value of my Bitcoin starts to become economically material, such that if I were to slip off the side of the planet, get hit by a bus or whatever, it would really suck if my family can't get a hold of these assets. Then I need to be thinking about multi-sigs, dead man switches, and some other frameworks like that that create a continuity plan around my Bitcoin holdings. That's when it's economically material. There is a higher level of friction to the key control as the value of the Bitcoin goes up as a percentage of the value that I have. And then for the clients that we see, clients who have tens of millions, hundreds of millions of dollars in Bitcoin, they will never spend that Bitcoin. They can't possibly spend that Bitcoin. They don't have that kind of consumptive lifestyle. So now they're thinking, okay, well, I now need to be thinking about how can my Bitcoin transcend generations and at the same time create opportunities, at least in the United States, for tax efficiency. One of the things that you guys may or may not know about the United States is, unlike most places in the world, the United States will tax American taxpayers on every dollar of worldwide income. It's not source income. You could be a longtime permanent resident of Germany, Switzerland, anywhere else like that, but if you still have a green card, or if you ever were a green card holder and no longer are a green card holder, or you are a U.S. citizen, no matter where you live in the world, the IRS wants their tax on every dollar.
It's called FATCA, isn't it?
It is.
That's a great name, isn't it? FATCA.
Yeah.
It's from Obama, and I think in Europe and in Germany we'll have the same tax soon, I guess. So if you have a German passport, it doesn't matter where you live, you have to pay.
But it's easy to blame Obama for this. That's actually not Obama's fault. This has been in the tax code for generations. And so it is possible for a U.S. taxpayer to become a non-U.S. taxpayer through paying an exit tax, but then you've got mark-to-market capital gains tax at the moment that you choose to leave. There are also all kinds of unintended consequences, like if you are now a covered expatriate because you left the United States for tax reasons, you can be barred re-entry. So that means your entire family better expatriate with you, because if you want to come back, they could say, no, you can't come in. So it becomes really problematic. So when we're dealing with large values like this, we get into a lot of tax optimized structures for clients, whether it's income tax mitigation. They want to, when Bitcoin's back at $100,000, $80,000, whenever they start to kind of hit their sale price to kind of manage their exposure, we can help them structure their holdings in ways that are more tax efficient, either from a federal perspective or in the United States from a state perspective. And then I mean, there's no limit to the number of opportunities the IRS wants to come and separate you from your hard-earned wealth. So there's gift taxes, there's estate taxes, there's a special kicker called a generation skipping transfer tax if you want to give money to your grandkids, and those kick in around 15 million bucks per taxpayer, and the rate is 40 cents on the dollar. So it's usurious. But the good news is a lot of those taxes are optional. However, you don't get out of it if you're relying on dead man switches. You don't get out of it if you're dealing with cascading multi-sigs and stuff like that. You have to have legally recognized fiduciary controlled structures. And so this is, I know this is a very long-winded answer to your question, yep. but the idea is that when you've got that kind of wealth, the fiat world that we still live in has pretty draconian rules that apply whether you like it or not. And so then you can choose, well, do I want to get the fiat benefits of fiat recognized planning, or I just want to do these like secretive ways and hope that the IRS never finds out? And I mean, when you're dealing with hundreds of millions of dollars, hope is not much of a strategy.
Yeah, there's one advantage we have still in Germany. If you hold Bitcoin longer than 1 year, it's tax-free. Yeah. So and this is amazing, actually. Yeah. So, but now
there are other countries like Czech Republic has that too.
Exactly, Portugal as well. Yeah. There are a couple of countries in the European Union which still have this. But for example, in Germany, the socialists and the communists they want to ban it actually. So this is a really hot topic right now in Germany. I don't think it will come. Perhaps as information for you guys, if you're German, I just talked a couple of days ago with one very important member of the parliament from the conservative party, CDU, and he told me, no, it won't happen. So we can be relieved actually. But you see, if they get greedy, if the number goes up, they get more and more greedy. Sure. It doesn't matter if they're in the United States, if they're Republican or Democrats, if they're in the European Union, if they're Lion or Merz, they all want our money because they're fucking socialists.
Well, and there is no such thing as fiscal restraint. I mean, it's like when you can print all the money in the world, what's the temptation? You print all the money in the world. And then when those debts come due, you're looking for something of value to grab a hold of or to generate revenue off of. I am not optimistic that the United States will ever get something like what you're talking about. I really am not optimistic about that.
No way.
Regardless of who's in charge of the administration.
Yeah, we saw it with Trump, you know, with the Doge department. He said, oh, I will fight the debt. Nothing happened. I think now it's nearly $40 trillion. Yeah. And they pay $1.3 trillion only for the interest.
Yes.
This is amazing.
Yeah.
This is crazy.
Right.
So
yeah.
It doesn't matter who you vote for.
It doesn't matter who you vote for. People think that Donald Trump is the greatest thing that ever happened to Bitcoin. You don't understand Bitcoin. It's like you just don't get it. This is the president who created and pumped and dumped his own shitcoin to the tune of $2 billion in his pocket.
And the shitcoin from his wife.
And his wife too. So they're double.
Who bought it? Come on, guys.
Yeah. Who's holding Trump? I'll hold your hand up proud if you're holding Trump.
Melania coin.
Yeah. So it's look. I'm not trying to dish on. I mean, I hate everybody. So it's like I'm not trying to dish just on Trump.
But one question. He's a billionaire. Yeah. You know, he's nearly 80 years old. Yeah. So what was the intention? Was it Barron? Was it Eric? Or why? For $100 million? What the fuck? Bad advisors? Or what's going on?
Well, so if we can talk politics, I'd love to do this too. But I have a thesis out here.
Let's go.
So there are actually two things at play. This may not be a very popular statement. I can't really read the room yet. So Donald Trump, in my opinion, would not have won either election if the Democrats ran anybody who could win. So Hillary Clinton had so much baggage. I'm not like anti-Hillary Clinton either. It's like I am, but I'm an equal opportunity despiser of politicians. And so she was unelectable. And so the Republicans didn't run anybody else. He sucked all the oxygen out of the room through social media because he is brilliant at manipulating social media. So that was a legitimate win on his part, but the Democrats had nothing. And then you have
Harris.
Well, you have weekend with Bernie for like 2 years of the remaining Biden administration, and this guy said, "Well, I'm just going to be the bridge candidate to the next generation," and then he's like the corpse that just won't leave.
You
It's
think
like
Biden is still alive?
I think he's hanging out with Janis Joplin and Elvis Presley somewhere. But anyway, that's a bit of a digression. But the broader point is that I just don't think that the political climate in the United States is, or at any time soon will be, in a stable enough environment for the United States government, whether it's Congress, whether it's a presidential administration, to really be serious about Bitcoin favorable policy. And the other side of it too is Bitcoin doesn't care. It doesn't care. Bitcoin didn't need the Clarity Act. Bitcoin didn't need to be in a treasury reserve. Bitcoin's doing what Bitcoin is doing. And so I think it's actually better in the writ large for ordinary people to be able to get access to this form of money that is, it doesn't belong in the government. It is an anti-government money. So I don't want Bitcoin in the government.
Yeah, but it's also actually an anti-finance investment bank
Right, yeah,
money,
right.
and they still occupied it, or...
Yeah, kind of co-opting it a
I
little bit, yeah.
had a fight with Jack Mellors like 2 years ago on stage here, on the main stage, because everybody was clapping, "Oh, it's so great that Wall Street adopted
Yeah.
Bitcoin." And I was like, what the fuck? Satoshi Nakamoto created Bitcoin because against them, you know, it's actually the enemy. And now everybody is like, yeah, let's go in bed with them.
Yeah, it's a...
Makes no sense.
Yeah, but again, for a lot of people, and people in this room, people who come to conferences like this, have or are exploring a significant economic stake in this asset that algorithmically can only trend up and to the right. It just, again, the math doesn't lie. And so we then have to think about, how do we manage this asset over time? And Jimmy Song had a comment downstairs earlier this morning. He said, we should start to think about Bitcoin not as something that we own, as much as something that we're caretakers of. And that's really consistent with a lot of our framing is, this is a stewardship asset. This is an asset that we get to steward during our lifetimes. And yeah, we can benefit from this during our lifetimes. And if we want to sell some periodically, if we want to use some, absolutely, let's do that. But odds are, people who are serious about Bitcoin will never consume it all. And so then we, as stewards of this asset for the next generation, need to be thinking about, how can I then make sure that the people I leave behind and or the causes that I care about the most benefit from what this asset is and what it does. And I don't just mean in fiat terms. I want to make sure that when I ultimately die, that the people I care about can step into owning my Bitcoin with frameworks that set them up for success. And that's not just key management control. That's not just a cascading multi-sig. That's making sure that if they're inheriting millions of dollars, that I've protected it from a tax efficiency perspective. I've protected it in case one of them gets divorced. I protect it in case they have a business failure. I protect it in case they want to get jurisdictional exposure to some other nation. So you don't get that if you don't have legally recognized structures. And so that's again, this is kind of back to this idea of the sovereignty paradox. We need to be upgrading our thinking, just like we're running, was it Bitcoin Core 31 or whatever we're doing right now? Like, Satoshi didn't sit still with Alpha 01. It's like the network has continued to evolve. Our thinking has to continue to evolve as our stake in Bitcoin becomes an increasingly significant portion of what we are creating as our financial legacy.
Definitely. Do you have any questions, guys, to Matt or myself? Okay, not everybody, please. Just one after the next. Okay.
There's nothing off limits.
It's still room 614 at the Marriott. I made this joke yesterday
Yeah?
on main stage, and some people believed it and went to the Marriott
Just-
and knocked at the door and asked for Mr. Friedrich, and they called there and I said, there's somebody else in the room, so I had some trouble, actually. No questions? So then let's talk about the price predictions, because people love that. So what do you think? Where do we stay next year at the Bitcoin Prague Conference?
Oh, man.
Yes, now the questions. Yes. Six figure or 4?
This time next year? I think that's an impossible question because I'll tell you, let me do this.
Oh, when do we get to the new all-time high?
I'm going to answer a different question because I think this is a question that people will be more interested in. Every time I have tried to set a price prediction, I have been wrong and too bullish. So now I'm going to go the opposite direction, and I think Bitcoin is going to be at $15,000 12 months from now, and it will not be the case. So
I agree.
yeah, there we go.
And Michael agrees a lot about it.
Yeah,
He
exactly.
starts sweating.
Exactly. Yeah, I think Bitcoin price predictions are, I don't know. I get it, but it's kind of a fool's errand.
I think, Matt, I think it depends how much money they print. That's it. That's the only question. You know, a Bitcoin price doesn't go up, fiat devalues. That's the whole secret, actually. So if the United States, if the Fed, for example, cut rates again and print more money, then yeah.
I think there's just a lot of variables at play that are just impossible to predict. I mean, when is the AI trade going to burn out? When is the SpaceX IPO really going to be seen as the smoke and mirrors that I think it probably is? I think it's profoundly overvalued. And so, how long is that trade? Is that a 3-month tail? Is it a 12-month tail? Is it an 18-month tail? I would say. So I think a lot of that stuff has to happen. There's going to be a lot of pain between here and there. I do think that the alt world is largely going to zero pretty quickly.
Yeah, but remember the .com boom, for example, it was pretty long irrational.
Yeah.
You know, like I think Buffett got out of the market in 96, and then it kept on going up till 2000. Yeah, so he missed like 3-4 years actually.
Yeah.
So we will see.
Yeah.
Chris.
Any questions for this expert panel? Raise your hand. Yeah, but there's a question. Come on. Encourage people. You guys share a mic?
Somebody had to go first.
Sir, what is your name?
John. Hello. What do you see in terms of common themes in families that you manage, in terms of how the parents interact with the children, in terms of I don't know if I'd call it home life, but in terms of, do you see anything when you see the families interact in terms of whether they're even teenagers, and how do they, parents that believe in Bitcoin and everything it offers, how do they pass it down successfully? What have you seen that is most successful that maybe you wouldn't recognize? It's almost like a culture of a family, right? And whether or not the kids invested on their own and say, I think it's hard in the US to have kids invest currently in Bitcoin directly, I believe, currently if they're underage. But do you see any themes or anything that have stood out to you that you're surprised by or you didn't expect?
Yeah, I love that question, John. I think a couple of ideas. One, I think most people wait too late to start those conversations. I think kids are able to absorb a lot more information earlier than we think. Now, obviously, it's got to be communicated in age-appropriate ways. There's got to be storytelling, and it also just has to be part of the rhythm of the family. It's just it can't be an event. It has to be the culture. And so we talk about why do we do the things we do as a family? Why do we do them the way we do them? What is it that we believe about the world? And what is it that we believe about our wealth? Whether it's fairly modest wealth or whether it's enormous wealth, the kids have a sense of what's going on in the family, and it's either this undercurrent that nobody talks about, or the successful families are the one who said, this is who we are, and if we're going to go to private school and fly private, that's great. Let's talk about it. Let's be honest about it and not try to hide it. And then a lot of things where kids really start to connect pretty early on is in causes that they care about, philanthropy, whether it's if they're a parochial school, for example, making sure that, hey, there's maybe another kid who can't afford to go to camp this year. Why don't we pay their way? Great. That's just a glimpse of the family to say, yes, we have means. Yes, we are generous. No, it's not always just about us and our consumption, and we can do something for somebody else. But yeah, I'd say start early, make it consistent, make it be part of the culture.
Any questions? Okay, I have a question.
There was one.
There's
Oh,
one
that's
behind you
too
too.
late.
Yeah.
Big fan, first-time caller. Mark, isn't the only question with price predictions? Bitcoin in self-custody, 1 Bitcoin is and for always will be 1 Bitcoin. It's all that matters.
Exactly, that's what I said actually. So Bitcoin doesn't go up in price, fiat devalues. So if you have 1 Bitcoin, it's 1 Bitcoin. If the price triples, it's still 1 Bitcoin, doesn't change. So that's why I'm very bullish, because I think in the next couple of years, the debt will rise. We will see more volatile markets. We will see more desperate governments. We will see more money printing, of course, because the debt is out of control, definitely. The bond market is a ticking time bomb. It's just a matter of time till it's over. We have governments who will fail. We will see, perhaps even a monetary system reset. So you need to own limited assets, limited through nature or by math like Bitcoin. So 1 Bitcoin is 1 Bitcoin. If you have one, you're a lucky bastard.
Are children allowed to own things? Like for those of us who may have paid our children allowances in Bitcoin to teach them money and numbers when they were, 15 years ago, like, what do they actually own that? Like, is it like taxation? Like, what's the legal treatment of things like that?
Yeah, that's a great question. What's your name? Brian? Yeah.
Brian.
Yeah, thanks, Brian. So the answer is maybe a little bit more nuanced than binary on that. At least in the United States, if you're under the age of 18, you can't hold legal title to assets. You can hold it in trust, for example, for the benefit of a minor child. And at the same time, before I get to the more nuanced side of this, you can, as a result of those types of structures, shift the value into the child's tax bracket. So if the child were to sell that Bitcoin, or if the child's trust were to sell that Bitcoin, it can be carried out at that child's income tax rate, which is most assuredly, I hope, significantly lower than the parent's tax bracket is. So that's the technical legal answer. The other side of this, which is, again, I can say this kind of stuff because I'm no longer practicing law, and I've never practiced law in the Czech Republic. So the other side of this is we have to also remember that Bitcoin is a bearer asset. Possession is ownership unless proven otherwise. So when we're dealing with small amounts, I mean, you're probably not going to whole coin a 6-year-old outright. I mean, maybe you are, but you're probably going to just give them like $50 worth of sats or something like that. No harm, no foul, at least under the US tax code. That's not a reportable gift. It's no big deal. If you want to show them how to set up a custodial wallet, hope your 5 or 6-year-old, 7-year-old doesn't have a smartphone, because then you probably have other issues to deal with. But you can give them modest amounts, just like you would give them an allowance in cash. Yeah, they can have that cash. But yeah, with small amounts, you absolutely can, and I would encourage you to do that. I didn't hear your question. Yeah. So the question is, what if the amount you gave them was small at the time, but it's no longer small? You whole coined your kid back in 2013. That's a different question. This is one of the most common and vexing problems that we run into in the estate planning industry, at least in the United States, because regardless of whether a legally formed trust exists, you as the parent are, once that gift has been made, you are you are holding that in what's referred to as a constructive trust. It's like you gave it to the kid, but the kid doesn't have legal ability to manage that, so you are holding it in trust for them. And so then we've seen this with equities. People would put like a slice of their company in the kid's name, or they'd put some investments in the kid's name, and then it popped. It's like, holy cow, I didn't really mean for my kid to have $3 million when they're 17 years old. Okay, well, the planning gets really complicated and can be very fraught, both for the parents and honestly for the legal advisors who set that up, because then you have you can certainly have the accusation when the child reaches the age of majority that you have then locked up these assets that they would have had free access to when they turned 18. But there are strategies people can do, which you could even do this with Bitcoin, but you could create there's entities called family investment companies, usually a limited liability company in the US, it might be a foundation company here in Europe, it might be a limited partnership in the United States, and you could actually put that child's assets into that entity and then give the child a piece of the equity in the entity. And so now what you've done is you've taken a liquid asset and you've made it an illiquid asset. So there are ways to do what you're talking about when you've got an asset that has gone up significantly, but it's very complicated and it's challenging.
I would like to add how the situation in Germany is. For example, as a parent, you can give your child every 10 years right now 400,000 euro in form of any asset. And Bitcoin, gold, silver are tax-free after 1 year. So if you plan to give something to your kid, every parent, mother or father, 400,000 every 10 years. And I recommend definitely doing that because we don't know how long this will be allowed. They're already talking about banning it as well. So this is a great way to give the next generation some wealth.
So I've got a question to follow up on that. So are those types of things, are those only available for outright gifts to the child, or could this be through like a foundation company or a trust or something like that?
Yeah, there's also, of course, possibility with trusts, yeah, but then it isn't tax-free anymore. Because as a private person, it's tax-free. So if you give your first child 1 Bitcoin, for example, it's worth like $60,000 or more. Then after 1 year, it's tax-free. If it goes to 1 million, it's totally fine, totally fine. And then next 10 years, another 400,000 K in any asset.
And I'm sure we got another question, but before we get there, I want to just kind of plant the seed maybe for some more conversation. Is part of what I want people to understand is that there are multiple layers of decisions that have to be made. There is the process of mechanically transferring an asset from one person to another. I can give you Bitcoin outright. I can give you a piece of real estate outright. I can give you money outright. Or I can give it to you in some type of framework. And when we're dealing with significant amounts of money, one of the questions that we should be asking ourselves is the recipient mature enough to make proper decisions around this? Do they have enough maturity, or do they have any other issues in their lives? Are there substance abuse concerns? Are there spendthrift concerns? Are there relationship concerns that might make us think that they may not yet be ready to take sovereign ownership of the assets? And so a lot in the United States, trusts are extremely common because I have the ability to put assets, Bitcoin or anything else, in trust for the benefit of my children. And if everything is cool, if my kids are doing just great, I can even make my kids the trustee of that trust. But because the kid doesn't own it outright, if the kid injures somebody, if the kid gets divorced, if the kid has a business failure or something like that, the assets inside that trust remain protected. All the kid has to do is resign as the trustee of their own trust, and the trust maintains its protective framework. If I haven't done that, and if all I've done is mechanically transfer the assets, I have taken away all of that potential, not just the protection, but the privacy around the ownership and enjoyment of those assets, and sometimes the tax efficiency.
Hello, Roland Elias. I have a question for international moving clients of you. Is it better for trusts in the USA or, for example, a foundation in Liechtenstein? What do you think is the better option for people who are moving around the world and don't have a real, base, home base, and depends on exit taxes, for example, in Germany and something like that?
Yeah, I think the answer to your question is yes. And the reason I say that, I know it sounds glib, but the idea is that when the families that we're dealing with, if they're not already thinking globally, they need to be thinking globally. And so our position is you should have the right strategy in place for the jurisdictions that you're going to be in. So our clients usually have a collection of different types of entities, and those entities have a collection of different types of accounts established at qualified custodians around the world. So it's actually very common for one of our clients to have trusts that might be established in the state of Nevada. Nevada has very favorable trust laws. They might have something in South Dakota or something else like that, but they're also going to have something, they might have a company in Nevis that's an investment company in Nevis. That investment company may be owned by a trust established in the Cook Islands. To the extent they've got accounts in Europe, they might have a Liechtenstein foundation, they might have a Swiss foundation, something like that, that's onboarded with a Swiss asset manager, a Swiss private bank, or a global crypto custodian like Anchorage in Singapore, or Tetra Bank up in Canada. And so the types of clients, when we're dealing with generational wealth, generationally wealthy families are and will be increasingly globally mobile families. And so their solutions, their legal strategies should also be flexible enough to not only be able to move from one jurisdiction to the next, but probably have roots on the ground in kind of the main anchor jurisdictions where they plan to have economic interests.
Hello, this is a very fascinating conversation in terms of what I might call legible Bitcoin, which is legible to the state, reported on KYC'd exchanges, et cetera, et cetera. Certainly makes a lot of sense if you're talking about trust instruments and things like that when, discussing, legacy planning and things like that. And yet we are also talking about a relatively novel instrument here that is potentially illegible to the state and something that could be illegibly transferred on and passed on and things like that. I mean, do you have any position on, because there are strategies to acquire non-KYC Bitcoin. Yeah. There are strategies to acquire things that are completely illegible to the state. And I think there is probably an argument to be made to like, hey, if I have a certain stack, yes, you could have that instrument that's, embroiled in trust or, bound up in a, corporation or a family office or whatever it is. But do you have any opinion or ideas about like having some set aside, assuming that you had offspring that were reliable and mature and responsible and could deal with that? I mean, do you have an opinion there?
Yeah, I mean, it's probably not going to surprise you that my opinion's a bit nuanced on this. I've got a philosophical answer, which I suspect you could grok, but then there's also the kind of the technical, maybe more pragmatic side of it. When we're dealing with any non-KYC'd asset, whether it could be Bitcoin, it could be a bag of cash somewhere, it could be physical gold that's unmarked, that's in a vault somewhere, but we're dealing with a valuable bearer asset that isn't on the record somewhere. While philosophically, the libertarian in me screams, yes, please, more of that, the pragmatist in me believes that there are innumerable points of failure where that could go wrong, and it could go wrong very badly, mostly for the recipient of the asset, less so for the person who transfers it. If I leave my family a treasure map and say at where X marks the spot, you can dig up a bag of gold, I've kind of done what I cared to do. But now, if my family finds that bag of gold, if they don't know how to manage that gold, or if they don't know how and where and when to liquidate that gold, and or if their basis from a capital gains tax perspective becomes relevant, they're going to have a lot of very uncomfortable questions that they've got to answer, at least in the United States, to bureaucrats in three-letter agencies that could not only separate them from their money, but also from their freedom. And so I think that's just kind of the hard, pragmatic truth to dealing with solutions that skirt the system. Philosophically, I'm all for that. as a pragmatist, I would not want to rely on a meaningful portion of my legacy passing that way, and especially with something as presently as complex as Bitcoin. Bitcoin is not a shiny rock. I mean, negotiating Bitcoin, and I think negotiating Bitcoin non-KYC to non-KYC through difficult channels would be very challenging for somebody who's not the hardcore Bitcoiner in the family to figure out how to do. There's just too many opportunities, I think, for that to blow up. I think we're at just the beginning of this era where Bitcoin becomes generational wealth. We're 17 and a half years in at this point, from concept to the Overton window to meeting a bunch of people in Prague and complaining that Bitcoin is at $60,000 and has been tracking sideways for a while. It's like, guys, it's like, I know we're so early is so trite and we all get tired of hearing it, but we are so early. And now we're in a world where people have to write 7 bestsellers in Germany and has an entire career around educating people around this asset. And you've got guys like me with multinational companies that are serving people who have generational wealth already in an asset that has only existed for 17 years. It's like, we are so early, guys. And I know that sounds crappy at $60,000 when we thought it was going to be 100, but we are where we are.
When in doubt, zoom out. Mark, final words?
Yeah, like Matt said, Bitcoin is still a teenager, 17 years old, still maturing, and yeah, we're really early. We can be so grateful that we found Bitcoin that early, actually, and it has a great future. I'm very positive about development, and Bitcoin changes the world. It's the biggest revolution of all times, like I said. That's the title of my book. So no, I'm very positive, and I think the next couple of years will be really exciting, really exciting.
100% agree. All right, wonderful. Thank you, Matt and Mark, for your wealth expertise. Give it up